In this video, I wanted to discuss the impact of artificial intelligence on trading. Stick around to the end to receive a free trial of an AI-powered expert advisor or Forex robot to be used to pass prop firm challenges. So, in the past year and a bit, there's been an enormous hype as well as disruption around artificial intelligence and machine learning. And this really started with the introduction of ChatGPT to a more of a mass market audience. And then along with ChatGPT, we started seeing several other competitor models, including Claude, Gemini, Prophet, and just a variety of companies putting billions and billions of dollars into developing artificial intelligence models. And as traders, I think many of us saw the development here, and many of us have also been following artificial intelligence for years prior to the release of any of these large language models. So I wanted to just touch on some considerations for us and how we can capitalize on artificial intelligence and what we should be paying attention to, just to make sure that we're always staying ahead of the trend and we can best use these technologies to further improve our profits. So in this short presentation, I wanted to discuss a few different applications of AI to trading, including prediction, order execution, strategy development, and finally, reinforcement learning. So before we even dive into artificial intelligence, I just wanted to show this graph, which is actually quite an old graph. It's from around 2015 or so, which demonstrates the percentage of total trading volumes which is done algorithmically. Because not all traders know, but the vast majority of actual dollars in the majority of asset classes is executed already algorithmically. Particularly in equities here, we saw in 2014 it was around 65%. I believe it's actually quite a bit higher than that by now. And the other different asset classes like futures and options are also catching up. And the only kind of the laggard here is fixed income, because the majority of bonds are still traded over the counter. I used to work at a bond trading firm, and you still had to actually pick up the phone and call somebody in order to place an order. But I think we are seeing significant changes in all of these different sectors. And the reason why I wanted to show this graph is because as the majority of trading is done algorithmically already, most of which is perhaps not AI enabled, it isn't a huge stretch to start introducing artificial intelligence and machine learning algorithms to trading. Because if it's done algorithmically already, we have that data, we understand the order execution process, and we have just so much information to work with that it lends itself really well to the training of models. So just to kind of show this graph to demonstrate that really trading is probably one of the most automated and computerized sectors already. So it's fairly natural that we're going to be one of the early adopters of artificial intelligence technology, just because it's a pretty natural transition. And what I wanted to perhaps discuss is the prediction element of artificial intelligence. And to kind of give you guys some examples here, I went to the Oxford Mann Institute's website to kind of get a couple papers and case studies of what people in more institutional finance are discussing. And the reason why I like the Oxford Mann Institute is they're affiliated with Man AHL, which is one of the oldest and largest quantitative hedge funds in the world. And many different large quant shops like Citadel are usually a little bit cloak and dagger. They don't want to tell you what exactly they're working on. So it's not like they do publish, but they don't necessarily share quite as much. So because Man AHL sponsors and is affiliated with the Research Institute, sometimes it's interesting to read their papers because many of them are co-authored by quants at AHL. And you can kind of perhaps see what's just top of mind for some of the large quantitative funds out there. So in terms of prediction, artificial intelligence and machine learning more specifically is obviously can be used to predict price. And as traders, especially as retail traders or like small business owner traders, that's probably the most natural way that we think that AI can be used. Perhaps a random forest to tell us if a stock price or if a forex price or a commodity is going to go up or down. But there's so many other applications of prediction than just price. Particularly, predicting price is probably the hardest thing to do because there's so much noise and there's so much randomness. But what many institutional players are looking at goes far beyond predicting price. A great example would be predicting market regimes. Perhaps we're going to enter a very choppy period, a period of consolidation, which is driven more so by fundamental factors. A great application of artificial intelligence is perhaps predicting some of those fundamental factors which would then impact regimes. For instance, natural gas prices are heavily influenced by the weather. So if you wanted to predict if we're going to be in a bullish or a bearish period for natural gas, you could instead use your models to predict the weather, which would then influence the price of the fundamental, of the futures or spot market of natural gas, etc. So here, instead of trying to train models on more very, very random, very noisy price data, you could train them on far more consistent meteorological data and then use those predictions to then predict price. So that's really kind of the regime focus of many of these large funds. And one of the good example here is some of the best meteorologists in the world, as well as data scientists, all work at Citadel because they have one of the largest natural gas trading desks in the world. So this is really a big application of artificial intelligence and machine learning in general. There's also this great paper here on lead-lag relationships. And a great example of lead-lag relationships would be the price of gold and the price of gold miners. Obviously, there's a correlation there because if your entire business model is selling gold, you will be heavily impacted by the price of gold. But there is a lead-lag relationship. And what that means is if the price of gold goes up, there's perhaps a lag between that and the price of gold miners. And this actually goes to far more companies than just the obvious. And being able to anticipate these relationships and create trading strategies based on them is another great application of AI because you're once again predicting more of a linear relation, not linear relationship, but a less random relationship than just trying to predict very, very noisy price data. A final application here is predicting liquidity. So many quant funds like the Optivers, the Jane Streets, the big institutional quant firms, they're not necessarily taking directional bets all the time. Quite often, they're acting as market makers. So a directional bet would be, do I think gold is going to go up or down tomorrow? Whereas being as a market maker, it's I am entering the market and providing liquidity, so being a counterparty to other participants. So us as retail traders, when our order flow is passed to somebody else to execute, if the broker is not booking us, they're sending us to a market maker. As a market maker, you can decide whether or not you want to play in the market or not. And depending on the available liquidity in the market, you might choose to step in or not. This is another huge application of machine learning because it's really behind the scenes. We don't see it as much as retail traders, but it's a huge source of revenue for these firms. So being able to just predict availability of orders to be able to execute is a massive application. So all of this to summarize that probably one of the biggest applications of machine learning will be prediction because many of these models are made exactly for that, but the prediction goes far beyond just predicting price and goes to regimes, fundamentals, lead lags, and liquidity. Another huge element here is order execution. So many of the banks, and this is a great example from RBC's website and various quant firms, they're not only concerned about being able to predict price or take speculative bets, they're much more concerned about just being able to fill their orders. Because if you are representing a pension fund who's trying to buy $500 million worth of Apple stock, a huge concern of yours is not necessarily if you're going to get the world's greatest price because you're a long-term investor. It's more about being able to get filled without being detected by high-frequency traders and other firms which will be able to effectively piggyback off of you. So order execution algorithms are a huge segment of quantitative developers and programmers' purview. And artificial intelligence is something which can perhaps also be used here. And many different institutional firms have already started doing work here. And I see this as another large application of artificial intelligence which might be less spoken about. Another application, which I think is very useful for us as well as retail traders, is the strategy development process. And this can be as simple as knowing how to automate coding. So we have historically had to write all of our code manually, but now through tools like ChatGPT or Claude, etc., a lot of that can be automated, making us significantly faster. And then another area here is this is an optimization graph from MetaTrader. And historically, the biggest issue with strategy optimization has been how do you optimize without overfitting? Because if you use these very crude algorithms where you just try 10 billion iterations and pick the best one, it can be a recipe for disaster. So I believe that another large implementation of AI, and people have already started doing this, is being able to select parameters and develop strategies in a way which is perhaps more robust to overfitting, which could be an enormous, very interesting application. And finally, the last point which I wanted to touch on is reinforcement learning, because this is something that we effectively see, or we see quite often on the MQL5 marketplace. People like to name drop reinforcement learning. And the concept of reinforcement learning is that it's a type of machine learning where you're not necessarily giving something a target. You're not giving a model a target. You're creating an agent, which in this case would be a baby or a robot, and you're giving it a reward function. And this reward function effectively trains it to behave in a certain manner. And I'm sure you guys can see that this makes a ton of sense for trading. You could effectively have a robot, like a self-driving car, which is rewarded in the form of profits for trading effectively. So far, I have yet to see this done super successfully, but it just logically seems reasonable that you could train an agent to be able to very effectively take opening range breakouts and give it a reward function, and it can do tens of millions of different iterations to learn how to trade in a certain way. So this is something I like to just kind of keep an eye on, because I wouldn't be surprised if it becomes quite an interesting application in the future. But at least from what I know, to date, it is not super widely used, particularly in more of a retail or smaller investment fund contexts. So to kind of wrap us up here, I wanted to show you guys our Golden Missile system, which will be linked in the description. And Golden Missile is a great expert advisor which trades impulse candles with a machine learning filter. So if you want to play around with machine learning and see how it can be used to improve your win rate, I encourage you to check it out. And heading back here to the MyFX book, we've actually been trading this for several months by now. And in the past month, we actually made around 16% returns. So it's a phenomenal system, and really encourage you guys to get your free trial linked in the description. Take care.